All right, what's good, everyone? It's Fearing. It's currently August 2nd, 2025, and we're here for the video Understanding Narrative. This is part 3 of 4 of my model. In the previous parts, we're recording the introduction, the checklist, and the next video, the 4th part, will be on draw on liquidity. Now, this lesson, I'm going to clip together a old lesson I did, which is called Understanding How Power 3 Market Maker Models Interlink, and then refining it with quarterly theory. Now, the reason I'm doing so is because that was a beautiful lesson which goes in depth in regards to understanding narrative. Now, a singular lesson, now keep in mind, a singular lesson is not going to give you guys the answer to understanding narrative. It will give you guys a great and amazing introduction. However, it will not solve the issue. If you want to properly understand narrative and you want to get the most out of, trading my model and collecting data, start by opening up a post within the trader journals within here. Open one and begin to collect data. You want to collect data within here and you want to ask questions. Tag me whenever you have questions, whenever you want me to review your trades, and do so within here. What you want to do within here is post stuff like pre-market analysis such as this. You do this so you can give yourself an idea when you do a review. So you come into the day with a certain mindset. You are either bullish, bearish for the following reasons. Here we had a unbalanced range below, no sequential S&P to lows. So even though higher time frame is bullish at this point, in order for us to continue higher, we first have to drop, rebalance the range below, form some sort of sequential S&P before we can continue higher. We post that, do your pre-market analysis, and then do some sort of review afterwards based off of what was given to us. And as you can see here in review, I was correct. We actually ended up selling off a lot more aggressively than anticipated, but that's why we do our reviews, so we can learn why we ended up selling off that aggressively and so on. Do you want to do your pre-market analysis and chart reviews just like that? Same way I do my fear trade reviews. Now, when it comes to understanding narrative, again, I have to urge and explain this in depth, is that it does not matter if any of these videos get leaked. If you do not properly understand narrative, like it doesn't matter if the checklist gets leaked, if you are not understanding narrative, all of these concepts are going to fail. Every single QT concept that could potentially get leaked, and since it's on WAP, it's more than likely not going to get leaked, as it's very protected. But anyways, even if those concepts get leaked, even if the checklist gets leaked, the traders who watch those videos, they're going to fail because understanding narrative is the most important aspect of it. If you're just looking to, if you look for bearish sequential S&T, you think price is going to sell off because price forms bearish sequential S&T. But if market structure is bullish, we are going to expand and disrespect that bearish sequential S&T, because bearish sequential S&T doesn't mean price is bearish. Bullish market structure makes price bullish. If market structure is bullish, we are looking and focusing on bullish sequential S&T to form to put a continuation of that bullish market structure. We focus on market structure, not sequential S&T. Sequential S&T confirms reversals or continuation, aka lower time frame reversals, higher time frame continuation, but it does not determine whether or not market structure is bullish or bearish. It is market structure that determines that. So, like I talked about here, it's not just looking at the current days or current week's market structure. Like, let's just say the current week or day has sold off. That doesn't make price bearish. For all we know, that is just strictly manipulation. It's about understanding the full picture, understanding where price is relative to our higher time frame market maker buy model, such as a 4-hour or daily market maker buy model, and then studying the development of our weekly and daily power threes. Like, are we selling off because price is bearish, or are we selling off because price is manipulating to then expand higher and distribute higher? It's understanding stuff like that. Now, I'm going to link together the other lesson, and you guys are going to watch that. If there's any questions, comments, concerns, let me know. But the rest of the lesson will be an old lesson I recorded, and that's how you're going to get the proper introduction to understanding narrative. All right, what's good, guys? So it is currently July 25th, 2025, and we're here to regard the lesson on how we interlink Power 3 and market maker models, one with each other, and then two, how we refine both of those with quarterly theory. Now, this lesson is also mainly a daily review and trade recap, and that's overall how we're going to understand how we interlink the two, and how we combine it with QT. So before we move on, it will be important to understand, if you're watching this as a recording, that these are the topics in which you must understand in order to continue watching. This walk video will be at the end of the videos, so you should have gone through these, but we have time frame alignment, significant highs and lows, days QT videos, foundations of Power 3 market maker models. You should just know the basics of them at the very least. Sequential SMT, swing divergence, and fractal PSP. More so overall ranges is going to be an important aspect. But first thing is first. So as we know, Power 3s and market maker models, they interlink. And we know that price is constantly within one. We're constantly in the market maker model. We're constantly in some sort of Power 3. But what does that actually look like? Well, it looks like exactly what is represented here, where we have a given Power 3 represented as a candle, and that overall represents our given market maker model. Now, fear, not every single Power 3 gives us a clear market maker model like this. You're right. However, that does not matter to us. Our priority is trading the highest probability conditions. We don't care about trading every single daily Power 3. We don't care about trading every single day. What we focus on is trading the highest probability conditions, and more importantly, actually being able to recognize when those are presented to us. And that will be when setups are presented just like this. So as we see above, as we can see right here, this is exactly what would be classified as our highest probability Power 3 market maker models. These will be our cleanest days that offer the cleanest setups and overall deliver the best. In the most simple aspect, these are the days we want to prioritize. These are the type of days you size heavy on. These are the type of trades that you're going to add into positions and overall just make a week's and months worth of profit in a singular day. That's the whole point with understanding this. And I do say here that sometimes it's not just one given Power 3. Sometimes it can be 2 to 3 given Power 3s. And what that means is, well, what's represented here. So market maker models can be represented in either a singular given Power 3, sometimes 2 back-to-back Power 3s, so such as our Tuesday daily Power 3, Wednesday daily Power 3. They play based off of each other. Sometimes it is 3 given Power 3s, such as what we can see here, such as what Halo talks about within the open close divergence, which is what is presented here. But the overall aspect is understanding how we can catch the distribution of those given Power 3s. So let's reference our current market and the current situation that price is currently within. So quickly pull over my TradingView chart and we can quickly identify that. So that given Power 3, these given Power 3s, as we know, price is not just going to currently grind higher forever. As we know that price has recently completed a daily market maker buy model. We know that price has just been grinding and trending higher. But we know that it does not just move constantly higher. It moves in stages. And during some of those stages, we prepare to trend and tread higher again. And what that looks like is what is presented, what we had just seen over the last few weeks, where, as we can see here, price trends higher. We don't just go higher forever. We have to slow down. We have to engineer liquidity. That is just in the most simple aspect what the market does. So we trend higher. We obviously don't go higher forever. As we can see, price begins to slow down, accumulate, engineer liquidity at the highs. And that is our first given Power 3. This accumulation stage is our first given Power 3. So that can be represented as one singular candle. Our accumulation candle, the one the overall develops the range. From there, price then opens up wherever that given weekly Power 3 opened up at. What do? We open up, manipulate down, and we run out, or I guess specifically in this aspect on NQ, we open up, we fail to run out the previous week low, while NQ and while ES both do. From there, we can clearly see on the 4-hour time frame when we're no longer looking at the weekly time frame. Instead, just focus on the proper time frame alignment, which is our 4-hour. We see on the 4-hour, well, it's not so obvious on NQ as it is on YM, but on YM, this is the most clear market maker buy model that we can see. Weekly time frame here, what do we see? Well, on the weekly time frame, which I'll show right here, we can see, well, what was price delivering out of when we formed that weekly cycle sequential, or that monthly cycle sequential SMT? Well, as we can see, we're delivering out of, and let me zoom in very closely here, we're delivering out of a weekly BISI. Now, what's significant about that weekly BISI? Well, let's look over at the Monday, June 30th, 2025 candle on NQ. There's no fair value gap on NQ. And on top of that, the given BISI on the weekly time frame below us also is not traded into on ES or on NQ, but it is traded into on YM. So this is our 4-hour market maker buy model, playing continuation of the given daily market maker buy model that we know price has been within over the last few months. What confirms it? Well, weekly BISI, weekly SMTF, monthly cycle sequential SMT, and weekly cycle sequential SMT to confirm a reversal, to confirm our smart money reversal, which ultimately leads us to the current weekly power 3 that we're within today. So as we were noting back here, we had that initial weekly power 3, which overall developed our range. Next power 3, which formed the manipulation, which gave us our smart money reversal. And then that leads us to the given power 3 that we were within during this week, where we just distribute higher and play continuation of the given higher time frame trend. So what does that mean? Well, that means that we are given a clear narrative and a clear draw on liquidity higher. Now, obviously, in this circumstance, we're both all-time highs, so there's no clear draw on liquidity. But in the most simple aspect of going into our given weekly power 3, we can have a dead clear bullish narrative. As when we look over a reference YM, well, YM, they go for this week, which I had opened up back here. They go for this week is to play continuation off of the first stage distribution to complete our given 4-hour market maker buy model. So the most simple aspect, to simplify everything, this gives us clear bullish narrative for our current weekly power 3, which is the current week that we're within right now, which is, for reference for anyone watching in the future, is July 21st to July 25th, 2025. So from there, what do we do next? Well, going into our specific weekly power 3, we're overall looking for a classic open low high close, a classic bullish weekly power 3 development. So what that looks like is, well, let's quickly reference, as I've taken note of on here, what we can see on the higher time frame. So within the week of July 21st to 2025 to July 25th, 2025, our current weekly power 3, like we just talked about, price is actively within the buy side of the curve of the daily and weekly market maker buy model. And of course, like we just covered, more recently, we're in a clear 4-hour market maker buy model as well. So clear narrative on the higher time frame points bullish. Short-term market structure, like we just talked about, is delivering out of the Thursday, July 17th daily SMTF. So that's just what we saw within our given weekly power 3. So at the start of our week, when we zoom in a time frame, as you know, we wanted to see our classic open low high close for our given weekly power 3. Why is that? Because again, we're playing continuation off of our higher time frame market maker buy model. So we want to see classic open low high close development. Weekly power 3 opens, initially accumulates higher. Obviously, this is not accumulation, this is more of a XAMD, but in the most simple aspect, we grind higher. Like we talked about when discussing this daily power 3, we had no SMT attached to low week, meaning that is clear manipulation higher short term to then send price lower. Where do we manipulate lower to? Well, we manipulate lower into that daily SMTF. Price within that daily SMTF, as we can see right here, forms daily cycle sequential SMT within that daily SMTF, as we can take note of right here and here, between Q2 and Q3. As we can see, YM. Let's go forward a bit. I said daily cycle. I meant to say 90-minute sequential SMT. With 90-minute sequential SMT within that given daily SMTF, which was between Q2 and Q3 back here. So I meant to be on the 5-minute time frame to classify 90-minute sequential SMT. That's what I was meaning to refer to. So we had 90-minute sequential SMT within that given daily SMTF, and something that not a lot of you guys had noticed, which I'll pull up right here. Something not a lot of people noticed when price was within that daily SMTF, which also supported the entire expansion for the week, was the weekly cycle sequential SMT between Q2, Q3, aka Tuesday and Wednesday. So when price was reversing within Q2, or let's go forward a little bit onto the next day to then support the weekly power 3. As we can see, a lot of people were confused with this manipulation down on Wednesday, myself included. Why did we manipulate down so far? Why did we not run out the pre-sale low? And the most simple aspect is because we had weekly cycle in a market sequential SMT. As we can see right here, ZB, UB fails to run out the Q2 low during Q3. TN does, giving us weekly cycle in a market sequential SMT. So giving us clear sign of our weekly reversal. So that gives us clear bullish narrative going into our given daily power 3 for the rest of the week. So post our smart money reversal within our weekly power 3, overall going into each day, we're overall focused on taking longs. We're playing continuation of that 4-hour market maker buy model. And what do we see on the 4-hour time frame? Well, on the 4-hour time frame, we can see that going into our given daily power 3, what were we referring to all of yesterday? We were referring to the fact that price is delivering out of this 4-hour PRC SMTF. Halo classifies this as a fractal PSP, which is why I wanted you guys to fractal PSP / fractal distribution candle, which is why I wanted you guys to understand that concept before watching the rest of this video. So as we can see here, going into our given Friday, we are delivering out of this 4-hour SMTF. So immediately going into our next daily power 3, on top of the fact that we already know that within our weekly power 3, we already had a clear smart money reversal, clear bullish narrative. This just adds probability in terms of short term, which also acts as a proper time frame alignment for the given 15-minute market maker buy model that we're within. As we know, in the most basics of ICT's time frame alignment for market maker models, we go as far as this 4-hour PDRA market maker buy model. So everything we just discussed overall builds a narrative and confluence for what leads us up to our given daily power 3 and what is ultimately going to lead us to the trade I had taken. So as we just covered, everything's pointing bullish. We know price is bullish. Going into our given daily power 3, we want to see a classic open low high close. As we can see within here, price opens up within our daily power 3. We have upwards accumulation. From there, we displace lower. Original consolidation displace lower. First stage reaccumulation displace lower again. Engineer liquidity at the lows above our 2-week open. And specifically, we'll go back a bit, show the trend view chart again. Engineering liquidity above a few things. Engineering liquidity above our 2-week open, above a old new dog from the previous week. Let me quickly turn this on if it's not already. Engineering liquidity above an old new dog from the previous week. I was trying to reference back here, leading up to our smart money reversal, leading up to New York Open. So what is our game plan going into New York Open? Well, going into New York Open, such as what I posted in the pre-market, is that, let me quickly reference my pre-market analysis. So in my pre-market analysis, initially I pointed 50-50 as we have weekly cycle sequential SMT at the highs with YM. Nonetheless, everything is pointing bullish. As I stated, weekly cycle sequential SMT at the highs, daily cycle and 90-minute sequential at the lows. However, bullish higher time frame market structure inside discount of the previous day's range. And I said it's possible that given it being a Friday, we could potentially see a TGIF. So I'm overall going 50-50 into the morning. My decision to long or short will be based off of the first move going into 9:30, whether we manipulate higher or lower immediately at 9:30. And well, what do we see directly at 9:30? 9:30 opens up, and what do? We manipulate down. 9:30 manipulates down, and what do we get? Well, immediately at 9:30, and I should reference this chart. Immediately at 9:30, we had initially gotten a 15-minute and a 5-minute swing divergence. Now, this is going to be pretty hard to read in replay mode, but as we can see very clearly here, we had a 15-minute swing divergence. And again, for reference, in regards to the pre-market, our immediate move down here is lower, immediately giving us microcycle sequential SMT, a 15-minute swing divergence, which again, if I go on the 15-minute time frame, it's not going to show it. But at the very market open, we had a 15-minute swing divergence. We also had a 5-minute swing divergence and a 1-minute swing divergence. Again, we had 90-minute sequential SMT on top of that, on top of the daily cycle. So all of those were within the proper time frame alignment. As we can see, additionally, we also had a 1-minute swing divergence directly at market open, which then validated me to drop down to the 15-second. Now, from dropping down to the 15-second, I'd simply entered off of so market opens, we just placed higher, we had a 15-second CISD, and from there I enter long. That was my initial entry. Now, a lot of you guys don't enter off the 15-second time frame, and had you not entered off the 15-second time frame, this immediate loss would have been prevented. I'd entered there, stop loss at below, attached to the microcycle, the 15-minute swing divergence, all those lower time frame cracks and correlations, stop loss at the low. TP, of course, at high day, as again, we know we're just looking for continuation higher above all-time highs. So to show the microcycle, I'll quickly do that. So the microcycle sequential SMT, as you can see, between Q1 and Q2, ES fails to run off the Q1 low, and Q very obviously does. Q on YM we also very clearly do. And anyways, that was my entry, 15-second CISD, and simply had let it play out from there. Now, biggest issue was if you're not a 15-second time frame trader, you're strictly a 1-minute time frame trader, this loss would have been prevented. Why is that? Well, on one hand, we were holding the microcycle sequential SMT, so possibly that would have validated you to drop down or to stay in the 1-minute time frame, enter off the 1-minute CISD. But on this displacement leg down, we can see that YM aggressively manipulates down. Same thing on ES. And on that manipulation leg down, again, this is going to be hard to show in replay mode, but we can see that we invalidated the 15-minute swing divergence. We invalidated the 5-minute swing divergence. And we can also see we held on to the 1-minute swing divergence. But biggest issue was that we invalidated 15-minute and the 5-minute swing divergence, which acts as our middle time frame cracking correlation to support the 1-minute CISD. Now, I pretty much always wait for some sort of swing divergence before entering a trade. If I strictly focus on the 1-minute CISD or the 1-minute time frame, would I've entered off that CISD? Honestly, 50-50. Again, losses are part of it. So all I did at that point was, well, wait. I sat out. I was like a little confused because at this point, everything I checked off, nothing pointed bearish at this point. Everything was looking good for longs. I was a little confused because, at the moment, I was thinking there's no way that this fails. But I ended up getting stopped out. And from there, I'm looking for a new entry. Now, why am I looking for a new entry? Well, because again, we gotta look at our confluences referred to our higher time frame. As I was pointing out in the live trading recording, I was taking note of the fact that we were manipulating, or we manipulate down to this 50 to the 2-week open, mitigated the entire new dog filled, I guess, completed our fill of the DFR projection. So on that manipulation leg down, we were still holding every single bullish confluence that we could possibly need. And in the moment, the only thing I'm looking at is the fact that, okay, what actually invalidated my bullish narrative at that point? And well, in the most simple aspect, nothing did. All we did at that point was form a new 5-minute swing divergence, tapped into that new dog below us, tapped into the 2-week open, and additionally, I take a note of the fact that we're also tapping into two different things. We're tapping into EQ of that 4-hour PRC distribution candle, as we were taking note of earlier. Additionally, when we zoom in even closely, we want to stack PD rays. We can also take note of the fact that we are also perfectly delivering out of the 4-hour rejection block CE. Now, the only reason this is significant is due to the fact that we have a 4-hour swing divergence attached to that, and that is the whole reason as to why that rejection block can be significant whatsoever, because we're delivering out of that 4-hour SMTF, form the 4-hour swing divergence inside of there, and that's the whole reason as to why that holds significance. So with all those lining up, all those taking place, that then validated me to drop down and find a new entry. And my specific entry was a little bit different than normally what you guys see. My specific entry, as we can see right here, was entering off the invalidation of this down close candle. Now, initially in the moment, my plan was to just look for another 15-second CISD entry. And looking in review here, I had initially, let me review the woman again. Initially, I was going to enter off the 15-second CISD. The issue was we didn't have a 1-minute swing divergence, as we can see back here. There's no correct calculation on the 1-minute time frame whatsoever. Due to that, I was struggling to find some sort of 1-minute entry or 15-second entry. However, what we had seen was one, price invalidates this down close candle, invalidates / closes above, kind of treating it as a false CISD. It's not a CISD, but in my eyes, it acts as the same logic. Now, specifically what made me enter was seeing the 1-minute swing divergence that we had formed right here. So I saw price not invalidate any of the confluences for my position. I saw us close above this down close candle, acting as a false CISD, then forming a 1-minute swing divergence, specifically a 1-minute PSP swing divergence, because as we can see, up close candle on IQ right here, down close candle on YM, we souped out PSP, acting as a high probability swing divergence. I see that, I'm in. Enter long, stop loss at the low per usual, TP at the high, the same exact as before, and well, that was it. That was my entry. And of course, this stuff, you have to make very, very quick decisions. This is why we could trade a discretional model. It's like if you traded, like you can't really apply this as a mechanical model, because sometimes we are forced to enter off stuff like this, because that's all that's presented at the moment. There's no clear 1-minute CISD, there's no validation for a 15-second CISD, there's nothing that we can really validate. Of course, yeah, that 1-minute inversion. Now, a lot of people, I'm sure you guys are saying the 1-minute inversion is nice and all. You're right, but you need to understand the specifics behind that inversion. Why is that inversion nice? Well, let's look over at YM. Well, as you can see, 937 for value gap, more specifically a SIBI on NQ, SIBI on ES, and then let's look over at 937 on YM. There's no SIBI. So that is a SMTF. The fact that we inverse the SMTF, again, keep in mind, like I talked about in the SMTF video, SMTFs are what make inversions high probability. We inverse this SMTF, making this a high probability inversion. So yeah, if you missed this entry specifically, boom, you have a perfect entry off that inversion. And I don't expect a lot of you guys who have entered at the same place I did. That inversion would have been a perfect entry as well, according to my model. And of course, from there, I simply had let it play out ultimately until a higher day. Now, let's break down our market maker model a little bit more in depth. So that was our initial entry. We get stopped out. That's fine. It's a part of the win rate. We know we're not trading 100% win rate model. No one ever does. It's a part of the system. We re-enter, fully plays out to high day. Now, like I just said, let us break down that market maker model a little bit more in depth. So let's just say you missed the entire smart money reversal, because again, that was what we're entering off of. We had the original consolidation, first stage reaccumulation, smart money reversal. Let's just say you missed that smart money reversal entry. It was a little bit tricky. I don't blame you. What would have been the highest probability re-entry? Well, highest probability re-entry, as we know, is going to be within the first stage redistribution or the second stage redistribution. So simply waiting for that to present itself, we can then look for a new entry. Now, I'll specifically mark out here a few things that might be a little bit confusing, might not be. It's pretty simple, but might not be something you've heard about. But after we get our smart money reversal, NQ displays is up. I mean, all three indices displays up, but we're going to be focused on NQ. NQ displays is up, 15-minute CISD. And from there, on that CISD candle, this candle specifically is a PRC. Again, referring back to Halo's fractal PSB video, this is the same type of candle. Again, supported through daily cycle sequential SMT while delivering out of that 4-hour SMTF. Price seeks out EQ of that candle. Again, what's significant about it is the fact that it is a down close candle over here on YM. It's an up close on NQ and a down close on ES at 9:45, giving us a PRC distribution candle. We seek out EQ. From there, we're looking for higher prices. Now, what would be our confirmation for higher prices? Well, as we can see, as I marked out over here, we have our accumulation block, which is exactly what is right here. These pretty much act as, in the most simple aspect, if you haven't heard of them, these pretty much act as continuation breaker blocks and continuation mitigation blocks, continuation breaker blocks, however you want to describe it as. That's essentially what it is. It's classified in this reference as a accumulation block, and essentially within here, again, within a market maker model, it's pretty symmetrical. So we're overall looking for, our redistribution to happen overall in the same place that our reaccumulation happens. We can kind of treat that as a block, an area to look for continuation off of. So we're going to reference our new dogs again because we were doing that earlier. As we can see, price trades into this reaccumulation block within our new dogs from earlier this week. Now, what would be a specific entry for us? Well, as I've referenced here, and I'm going to reference on this chart, what we'd be looking for at this point would be some sort of middle time frame cracking correlation to that is in the proper time frame alignment to the smart money reversal. So as we know, within our smart money reversal, we had daily cycle sequential SMT. We also had weekly cycle sequential SMT. We're not going to be focused on the 1 hour. We're just going to be focused on the 15-minute. But we had daily cycle sequential SMT, as we can see down here, between Q3 and Q2. YM and Q both run out the Q2 low. ES fails to. We displace higher, 15-minute CISD, EQ of the 15-minute PRC distribution candle. From there, we're within the second stage redistribution. Like I talked about, we're looking for a middle time frame cracking correlation, and that is the 50-minute. As we know, we go from daily cycle sequential SMT to the 50-minute to the 1 minute. And on the 50-minute time frame here, we're looking for some sort of cracking correlation, such as either a swing divergence or SMTF or some sort of cracking correlation. As we can see, within this new dog from July 24th, we form a 50-minute swing divergence, and Q soups the previous 50-minute low, while YM fails to. ES also fails to. From there, that can then validate us to drop down to a 1 minute time frame. And on the 1 minute time frame, what do we see? Well, on the 1 minute time frame here, well, we see that we form a 1 minute swing divergence. Now you have two scenarios here. You can either look to enter off of the 1 minute CISD or potentially the 15-second CISD. The only reason we're dropping down to the 15 seconds is because we have a 1 minute swing divergence. So from here at this point, we're looking for continuation, 15-minute swing divergence, 1 minute swing divergence. That then validates us to drop down to a 15-second and enter off the next 15-second CISD, such as what we can see right here. From there, again, we're looking to just simply play continuation of the given market maker model we're in, and that is our entire goal within this trade in itself. As you can see, it gives us about a 1 to 3 risk reward. My bad, a 1 to 4 risk reward. I don't know why it just cut me, but in the most simple aspect, we can see that it does end up playing out. So I'll quickly just mark that out. One to 4 risk reward, pretty solid continuation entry, or specifically 1 to 4.5. Now, no, you can use the swing divergence before the candle closes. Just know that it is higher risk, but pretty much all my swing divergence entries are based off of, like, if we form a, like such as this example, if we have daily cycle score SMT, we form a 15-minute swing divergence. You don't need to wait for the 15-minute candle to close if you're going to find an entry in the 1 minute. If you're entering off the 15-minute alone, then yeah, you need to wait for the candle to close. But if you have a one, because again, keep in mind, 1 minute lower time frame CSDs are entry confirmations. If we have daily cycles score SMT, if we have a 15-minute swing divergence, CNA 1 minute CSD should confirm that that swing divergence is going to hold. But anyways, there you can see that 1 to 4.5 risk reward, pretty decent continuation. Now let's just say you're not comfortable entering there. Why? Because for reference, we didn't close above the reaccumulation block, so technically we can't really treat this as a a continuation break block just yet. Whole reason is because we did not close above. However, let's just say we did close above, such as what we did here. Well, what do we see once we close above? Well, price forms a 15-minute swing divergence. After price closes above, comes back down, retest it, we form a 15-minute swing divergence, such as what we can see right here. ES and NQ both sweep the previous 15-minute low. YM fails to. Well, technically, that is equal lows, but actually on the next 15-minute candle, we form a new 15-minute swing divergence, an actual clean one. So 15-minute swing divergence inside of that reaccumulation block, which is technically valid now because we closed above and traded back into it. New log from the 23rd of July, and from there we can then drop down to a 1 minute time frame. In this example, we can see here at 11:45 we do not have a 1 minute swing divergence, so at this point we can't validate dropping down to a 15-second. So our goal at this point is to enter off of the 15-second or the 1 minute time frame CISD, such as right here. Stop loss at the low, TP at the high, and you're looking at a solid 1 to 2.3 risk reward, which isn't the worst. It's really not that good for our model, but of course I'm just showing you guys how you can play continuation based off of Power 3 market maker models, and then use QT to find a solid continuation entry. And well, that is it. That is all you had to do. That's the only valid setups that you could have possibly found. The only way you could have got stopped within here when taking longs is if you just FOMOed in the longs, you didn't wait for your middle time frame confirmation, and just that is all it is. But overall, this should make a lot of sense in regards to how we use Power 3 market maker models. Again, if there's any questions regarding anything I talked about, let me know. But overall, that is just an explanation in regards to the current daily Power 3 and ultimately what led up to it. Again, like I said, today is a textbook example in regards to how we use these concepts, and we broke down everything that